Today is July 11th, 2020. We're going to be looking at the stock valuation for Gilead Sciences, given some assumptions we're going to make about the Remdesivir treatment that they have for the current virus. Now, there's a lot of assumptions that we're going to need to make, and I've put all those in yellow. Essentially, what we're going to do is look at those assumptions, look at some data. There is going to be a lot of numbers in this, but as an investor, I think it's very interesting. I thought I'd just share my evaluation with you. Basically, what we're going to do is look at these number of different assumptions, go and look at some data that we have available in order to forecast, like what is the infection rate going to be in the U.S., international, what's the hospitalization rate, what's our market size, and our prices. Thankfully, last week the prices came out, so we know those. There's two-tier pricing in the United States. About 67% of Americans are on private insurance, the rest on public, and so this price here is an average of those two, weighted average. Internationally, we also had prices come out for that for developing nations, and then I took the $60 per vial, which is $360 for the 5-day course of treatment, standard treatment that's being given internationally. So internationally, $360 for developing nations, and then the standard $2,340 for developed countries. Now, market size. This is my first assumption. 2 billion people outside of the United States, so internationally, you could up or down that as you like. We know there's 330 million Americans. One assumption I'm going to be making and then we're going to be looking at is what would we think is the percentage of the population infected annually? There's a lot of different data. We have headlines from Reuters and other places about European Union officials coming and talking with Gilead Sciences. There's also a report that came out this week, 62% reduction in morbidity, but that those findings need to be confirmed. So these are all things that are interesting news. Anyways, if you know the hospitalization rate, you know the infection rate, you know the market size, and you know the price per treatment, you can estimate annual expected revenues. And so that's basically where we're going with this. We're going to calculate the revenues total. Then the next thing we need to do is there's a company, I think it's like Gene something, New Gene or something in China that has taken the formula for Remdesivir and they claim to be, copying it, producing it. The point is, what percentage of those revenues is Remdesivir or is Gilead Sciences going to maintain? You could put it at 90%, you could put it at 50%. Moving forward, you take those revenues, they have a profit margin of about 24%. So that'll give us the new earnings. Now, this is one assumption that I'm also making here is that I'm just using their 2019 annual revenues. They're probably going to lose a lot of revenues in 2020 from all those non-emergency type cases that are getting put off. But basically what we're going to do is come up with the annual earnings divided by the 1.25 billion shares that they have, and we're going to come up with the earnings per share. Then we're going to put on a multiple. Currently it's at about 19.6, 19.3. If you go look at the 12 trailing months from Yahoo, there's some interesting assumptions with that. They assume that a $76 share price with a $3.90 earnings per share is going to give you that ratio. If you go and add up the last 4 quarters that we have, $6.55 EPS. And so in order to keep that same ratio, the stock would have to trade $128. Well, that's way above where it is. But if those earnings are in the books, so it just depends if that is going to hold. Now, most analysts forward-looking have a 10.6 PE ratio that they're going to tackle onto the earnings, and a lot of them are going to put earnings in 2020 somewhere around like $6.30 and about $6.40 in 2021. So with that lower PE ratio, it's only a $60 stock. And so it really matters a lot. This is a huge assumption, the PE ratio. So we'll look at that. I'll throw that up right here. So once we move into the Monte Carlo simulation, we're just going to add 2 extra assumptions, which is going to be the standard deviation that we're going to put on the hospitalization rate. So I just put 2% on the hospitalization rate and 1% standard deviation on the population infected. And we can change those, and we will, and we'll look at it. Again, changing the percent loss to competitors. Coming up with a earnings per share based on the mean average and also off the median. Have 3 different PE ratios that we can apply, the 19.3, the 11.5, and the 10.6. It'll give us 3 different prices, and then we'll take the average of those to get this pink box. So let's jump over and look at some of these assumptions. One thing that's good to know, I'm going to throw up a couple just picks that you've seen from this week. People saying, oh, there's a 25% infection rate in Arizona. It's not really the infection rate of the population. It's the percentage of tests that come back positive. Also, we see that 22 United States had 5% infection. Well, those again are the results coming back 5% positive out of the people that took the test. It's not of the whole It's not of the whole population. So for example, we know that there's 330 million Americans. Total cases, this is US data here. This is taken from the COVID tracking project. And so you know that it's about 1%, a little bit under 1%. So there's no way that some of these really high numbers that we're going to see. You just need to be a little careful, okay, when you look at the data. One of the next things we'll look at is the hospitalization rate. You can see that we have data here from Florida, so I'm going to use that. But basically, there were 17,600 hospitalizations. You can see that here. Out of the total cases, 244,000. So that's a 7.2% hospitalization rate. Also, before we move on, you can see that Florida had this is testing by day cumulative. The blue line being the percent positive by day, and so it's 24% or 17.8%. But you see that that's the percentage of the tests that come back positive. So it's not of the entire population. Just one thing we need to be careful when we're out there looking at different news reports. So next thing we're going to do is go over and look at some state data, and this is cases per million. We have a handful of states here. So basically, this is cases per million. So 10,000 over a million is 1%, which would mean that this here, New Jersey, is 1.9% cases per million. New York, 2%, 1.3, 1.5, 1.6, less than 1, 1.2, 1.1, less than 1, about 1, exactly, 1.1, less than 1 in these last three states. So there's some data for us, again, giving us about a 0.7% range to a 2% infected rate, 2% being the highest, New York. So that gives us some idea, at least as far as putting that into our model. Can we expect that infection rate is going to hit 2%? Well, it already has in New York. Could we say 3%? 4%. So I'm going to kind of start eventually at 3% in my model and probably move upward from there to look at different price points for the stock. But we have to be a little bit confident about, is this a believable number? Is this a logical number? So a lot of the data that I have is coming from basically Europe, but I want to look at a couple things. First, here the same thing, number of different countries and cases per million. So all of these are under 1%. Remember, 10,000 per million equals 1%. And none of these countries are at the 1% level, save the US. So the US is at 1%, everybody else well below that. So that's really interesting, right, to kind of zoom out from New York and America and look at a little bit more of a global picture. So under 1%. Now, the thing is with this, it's not really so important about the current. It really matters a lot more about the growth rate. So here you have COVID cases per million. And since I said today is July 11th, this is a live update. July 11th is today. So I basically went back 2 months. And what I'm going to do is look at some rates, some growth rates. And I calculated these, so I'll just read them. But it's really simple what I'm doing. I'll leave you this website. You can go and do the same thing. But over that 2-month period from May 11th to July 11th, Spain had a growth rate in cases of 31%. Germany had a 14% increase. France, 15%. Iran, 126, so they doubled, more than doubled. Belgium, 15%. And the United States also more than doubled at 150%. So that's a huge range. But, I mean, basically, it's not unbelievable that certain countries could see a doubling in just a 2-month window. So, like we said, a lot of these countries are, say, at 0.5%. So they could be at 1% within a month, within 2 months. Within 2 months. So if you have a global infection rate of 2.5%, say like December 2021, something like that, Christmas of next year, then the big constraint becomes, are you going to be able to have that many people hospitalized, or are they going to have access to some kind of intravenous delivery method? There's an up and there's a downside to that. I mean, on one side, you could say Remdesivir also put out information that they're starting to already do tests for the inhaled version, the nebulizer version. Like I said, also, you would say, well, there's probably going to be a vaccine at that point. There's a lot of companies working on the vaccine. A lot of people are saying that the government is going to try to, a lot of governments are going to try to do anything to make it look better before elections. So they might push something through. But there's two things on that. One, people say that there may never be a vaccine for this if it's like the seasonal flu. Two, many people may not want to take a vaccine if they're not forced to take a vaccine that they don't feel that has been properly, had its due diligence done. Rushed through this process, and so we're gonna have to see about that. But given those things, I guess we'll leave this there because honestly I'm not quite sure how to adjust it. I guess you could adjust it down. 5.7%. Internationally, 4%. So nothing really spectacular there. Now this is the one interesting thing, is that with the numbers that I put into that model, the 2.5% infection rate, the 5.7 U.S. hospitalization rate, and the 4% international hospitalization rate, with the market cap or market size of 2 billion. Even if we change it to 3 billion, it's right around where the stock is currently trading, at about that $73 that it's been hovering at for a number of weeks. Well, the interesting thing on the EPS then, like I said, I'm just taking the annual revenue from 2019, adding that to the additional revenue from Remdesivir here at the 1.3 billion or the 1.267 billion. So it only gives us earning per share, given the number of common shares outstanding, of about 5.36. Now, most analysts put it, like I said, 2020 EPS of about $6.30, and then in 2021 about $6.40. So if we were to adjust some things up, what would we need to see happen for that to be reasonable? EPS, that's more in line, $6.37, $6.33 for the next 2 years. So if that's true, then the stock is $67 stock, and a lot of people are pricing it at $65. So it seems like these are the conditions that we need to have, basically, in order for this to be a $67, $68 stock. There's been some stories coming out of India where people just protested the government lockdown, the orders to stay home. Because if you have day laborers, they don't really have that option. They're not sitting on a lot of extra money. They have to go out and work. And so, what if this, gets to be 7%? It's a $123 stock. Or what if basically a inhaled version of this comes out and there is no vaccine, which means the hospitalization rate really doesn't matter. It's as if the hospitals could take 100% of people. You know what I mean? It eliminates that intravenous problem. And so we could really raise this up to, if you want to say that everybody now has access to Remdesivir, i.e. everybody could go into the hospital and get it, that would be what we're saying. This is when you see that huge multiplicative effect, where it's is that a crazy number, $1,000? Now, I can't really use that given the numbers, because the numbers that we have are not based on an inhaled delivery system. It's based on the IV for hospitals and things like that. But it's at least interesting to see. One of the things that we do in accounting is a ideal scenario. What if you could run a machine all the time and it produced for you, $5 of revenue every hour? What if you could run that machine every minute of every day, every hour of every week? How much money would it make you? Well, this is kind of that type of scenario for this stock. If you could get it available to all these people with 7% infection rate globally, and that half the world is interested, and all the Americans, everyone in America is interested, then maybe $1,000 stock. That's interesting. It's interesting. It's interesting to see the numbers. We go to a 5% infection rate, but we could put a lot more variability into the model. We could say that, let's say it could go up or down 5%. So down 5% would mean there's a cure, there's a vaccine, but up 5% would mean a 10% infection rate. Well, at that point, let's drop this back down here. 9% hospitalization rate. Let's do 7% hospitalization rate. $103. Now, $103 isn't, to the moon, but if you buy in there's a 35% improvement on your money if you're in and out within a year. So 35% annual returns. Of course, it matters. This changes depending upon the scenario. It is factoring in multiple scenarios. So maybe 105, 101, 95, 98. This is running the same assumptions, which was the 5% population affected, both U.S. and international, 7% hospitalization rate, 3 billion people outside the U.S. Within the market for Remdesivir, same prices, 85% capture rate, 5% standard deviation on the population infected, 2% standard deviation on the hospitalization rate, gives us an EPS of about $7.80, $7.51. But basically, that's the kind of numbers we're going to need to have according to this model in order to hit a stock price of $105. You're going to need somewhere, some kind of EPS around 780, and I guess we'll just see. I hope that helps. If you have suggestions about how to make the model better, let me know.